To finish up our problem with the Jackie Corporation, the last question they're going to ask us, which is question number 26, is what is the balance in Jackie Corporation's investment in Robb Company? So now we're going to take all the information that we know and kind of put it all together. Now we know for a fact that our first investment, our initial investment, $2 million, is going to be a debit to our investment account. Of course, an investment account is an asset. It increases on the left-hand side or the debit side. Our credit would have been to cash, but that's more or less irrelevant for our problem. Now we know we have to also include, because of our equity method close relationship with the subsidiary, we know that we're going to share in their income. For 2013, Robb Company was showing income of $300,000, and our percentage, of course, was our 30%. So the income we are sharing here is $90,000. So let's put that in. Their income increases our investment. It certainly does not increase our cash. We don't share in that. But we are going to get our share of the income, $90,000. Now, dividends are problematic because of our close relationship. We know that dividends are going to reduce our investment. We also get cash for it. So that's a good thing, but it's reducing our investment. It's almost like we're getting money back. So their dividends were $100,000. Our share is 30%. And so the dividends that we're going to receive are $30,000. So that's great. We're going to get $30,000 in cash, and it's going to reduce our investment by $30,000. So notice it had no effect. The dividend had no effect on our equity income. It's cash and a reduction to our investment. Now there's one more element that's going on here. If you remember from the last problem, we were looking at excess amortization, and we calculated that at $55,000. That too is going to decrease our investment. So credit the investment and debit our equity income. So if they're going to ask us the ending balance in our investment account, we're going to take our totals here, and then we're going to subtract debits from credits. So our answer here is $2,005,000. Now they can ask this, but they can also ask what on earth was our equity income. For that, we're going to want to take our $90,000 and our $55,000. It's going to give me grief. So if they were to ask us, which they didn't in this problem, but you know it's coming. So if they were to ask us what is our balance for this year in equity income, we would have to say $35,000. So these three examples, we did our purchase grid, we did our excess amortization, and we did our entries for our investment balance and our equity income balance. So this should give you some idea of the basics of the equity method.